data is available digitally now as opposed to somebody having to physically go in, obviously. Right? That's point number one. The second is the wealth of data, which you said, which is more data being available.
Data is getting updated at much higher frequencies. The wealth of data that's available and the anchoring around identity and so on is absolutely fabulous. But the general populace is also aware of the fact that their histories matter. What they do matters.
What's also very fascinating personally for me also is the real-timeness of the data available. In other words, it's not just a static snapshot of data available.
And it's not just data being received, but drawing insights from that data to create variables or features from that AA data, which can then also get integrated into risk policies or underwriting standards.
Innovation is useful, but only till you know you have an ROI on it. I think we are in probably the 2.0 of the institution. So there'll be a 3.0, and I think we'll look back and say, well, for the efforts of leaders early on who took a bet, we wouldn't be here. And so for that, I think we're all very, very grateful. Good morning, evening, afternoon, depending on when you're seeing this. Welcome to yet another episode of Manthan, the podcast series brought to you by Sahmati, sponsored by Finvu Account Aggregator. The idea of Manthan is to bring rich insights from industry leaders that have been at the forefront of transformation of digital lending and financial services in general, on the back of digital public infrastructure, but particularly on the back of the Account Aggregator framework. My name is Vamsi Madhav. I am the CEO of Finvu Account Aggregator, and I'll be the host for this conversation. Today, we want to dive into the digital lending and financial services transformation, especially in the areas of risk management, credit profiling, and digital innovation. And I'm super thrilled to have Fakhari Sarjan here today with me. Fakhari is the Chief Risk Officer of Bajaj Finance. And as I keep saying, if there is a handful of institutions and leaders in institutions that could be called professors of practice, Fakhari certainly qualifies to be one. Fakhari, it's wonderful to have you here.
Thank you so much, Vamsi. Thanks you. Pleasure being here.
So, it's always interesting to speak about topics like digital public infrastructure and so on. But what's even more interesting, in my opinion, is to first learn more about people that have found themselves to be in this place. Give us a brief idea as to what your journey has been and, the institutions that you helmed and, finally what you do now at Bajaj Finance.
Yeah, so first of all, thank you so much. Thanks for having me over for this podcast. This is the first podcast that I'm doing. You seem to be a veteran at this. So
hardly so.
So let's see how my first goes. My journey into financial services started purely by chance. I would have very happily been selling paint all through my life.
Okay.
With Asian Paints, but it didn't allow us to be in metros, and I got married to my batchmate. So that's how I landed up in financial services. But over a period of time, it's been a fabulous journey. So right from my early days with a bank called Grinlays to various other MNC banks over a period of time, which ultimately led to part of the career being in India and part outside. So my last stint was with Barclays in New York. When I got headhunted to come back to India with Bajaj Finance. No regrets at all. It's been a fabulous journey, 7 years now, back in India. At an institution which is at the forefront of a lot of things, including what we just talked about in terms of how do you use the India stack and the DPI and the latest inclusion on that, which is the Account Aggregator ecosystem, to its best advantage, to be able to do better underwriting, better risk management, and better offers for our customer base. So it's been a fabulous journey.
No, fantastic. And as we were discussing before the cameras rolled, it's brought you back to Pune, which is where you started from.
Yeah, absolutely, absolutely. As we were talking earlier, I grew up in Pune.
Okay.
I can't still think about it as Pune, but I grew up in the city. So to be able to come back during my working life back to Pune was something I never imagined, because financial services and Pune really don't go together. It's all Bombay, partly Delhi, and now with a lot of the startup ecosystem in Bangalore.
Correct.
But it so happened that this thing worked out, and Bajaj as a family is quite well known in Pune.
Of course.
And as a result of that, that affinity was always there towards the family, and a lot of respect for the family as well.
Correct.
Which brought me to my first stint as a professional in a Indian promoter-owned corporate as opposed to MNC banks earlier.
Right. No, and I'm happy to be part of the Pune sort of financial scene as well, with Finvu Account Aggregator being also based out of Pune.
Yeah, absolutely.
And I now find myself part of that scene. So Pune certainly is rising up the ranks with respect to financial services. But your journey obviously has been deep with respect to managing risk, and give us an idea of how you've seen this concept of risk management and the risk landscape having shifted in the last couple of decades that you've sort of been at it.
So it's actually quite amazing when you think about how risk was being managed a couple of decades back, as you mentioned, to now. When you think about let's dial back to when 95, 96, where all of us were doing lending. So it's about 30 years back.
Yeah.
But that lending was largely happening to a very, very limited set of people.
Right.
Because information was available only on those limited set of people.
Correct.
They typically tended to be people who had a banking relationship with the bank that would lend to them. Typically had a lot more of wealth, assets, income levels, and so on and so forth, which allowed banks to have that comfort to be able to lend to them. There were no bureaus. There were no credit bureaus. There was limited information in terms of being able to identify a person as well, right? From a KYC standpoint and a unique identifier and so on and so forth. So if you think about that period, when I now imagine that back, and it was almost the wild, wild west, right? Because there was very limited information on which you worked. We somehow stumbled on and got it running. We used to have things like, a person would apply for a credit card or for a car loan or for a personal loan or whatever it is. There would be a process by which somebody would go and visit their offices and their home, do a verification, quote unquote, come back, file those reports, and all of this paper, right? Paper floating around all over the place. So from there to now, the bureaus were the first ones which came in. So around 2005, 2006 is when the bureaus really started to get into the play. That's where the lending landscape expanded quite rapidly. Now, if you add to bureaus to the India stack to now, many more of our journeys being digital in nature, the wealth of data that's available and the anchoring around identity and so on is absolutely fabulous. As a result of that, I would imagine that even till about the mid-2000s, most financial institutions were sort of banking, give or take, about 25 million people in a huge country of our size. So credit penetration was very, very low. Now, what has happened as a result of bureaus coming in and a lot more of data being available, that same ecosystem now is upwards of 700 million, right? Of people who've had at least some trade, as they say, on the bureau, right? So now that's, imagine from 25 to 700 million. right? That's a massive jump.
Mm.
And in a situation where, give or take, the adult population in India would be about 920 million odd. That's a fairly
Significant
large
percentage.
penetration.
Yeah.
Having said that, of course, it's underpenetrated. So within this 700 million, give or take about 300 million who are active, having a loan at any point in time or a card at any point in time. About 100 million would be, having deep relationships with a lot of lending institutions. The rest are still underrepresented in the bureau. So there's a lot of opportunity, and the data that's now available. Thankfully, with customers having full ownership of that data in terms of who they choose to give the data to, and for what purpose, and so on and so forth, which is where the AA ecosystem comes in.
No, and as you were talking about the bureaus and the availability of data, what also struck me is one is that data is available digitally now as opposed to somebody having to physically go in, obviously, right? That's point number one. The second is the wealth of data, which you said, which is more data being available. But I guess what's also very fascinating personally for me also is the real-timeness of the data available. In other words, it's not just a static snapshot of data available. Now there's continuous data possible, which also I would say probably has a fairly significant impact in terms of how you measure risk and how the latency of information about a certain individual has also therefore now gone down. You have a far more real-time view of a consumer's or borrower's current risk profile, and I would assume that's a significant shift as well.
Absolutely, because data is getting updated at much higher frequencies. Right? So if you look at the bureaus per se, the update frequency are getting updated quite reducing quite a lot. We used to be at monthly updates. It's already at fortnight. It will move on to much shorter time frames. So the data is getting updated quite frequently. In addition to that, there's a lot more awareness amongst consumers and the general populace, not just people who've experienced that, but the general populace is also aware of the fact that their histories matter. What they do matters. Because it's somewhere being collected and somewhere being utilized. So there's a lot more awareness about their scores, their repayment histories, their ability to be able to service the debt, and so on. So that really helps lending institutions like ourselves because the customer is also fairly conscious about making sure that their digital footprint is far more cleaner.
Protected. Yeah, absolutely. No, this is fascinating to see how the landscape is shifting, and even as many of us are in the trenches, it's sometimes useful to just step back and sort of take a peek at where one was, and that's the benefit of these conversations, which is it sort of gives a view at a slightly, distant picture, which sort of helps one connect the dots. But speaking about Bajaj, and I've been to the Bajaj office a few times in the course of our professional association in the course of my work. It's a buzzing, office. It's busy all the time, and when I speak to friends and including folks like you, I've always heard that Bajaj has always been at the forefront in terms of using data. I mean, one of the earliest, I think, innovations or investments that Bajaj has made is in terms of how to really mine data. Give us a peek into how that works in the machinery of Bajaj that sort of uses data responsibly to generate financial offers and opportunities for consumers.
So, as you rightly pointed out, the company has been very, very focused on data analytics right from inception. So, it is almost treated as a strong asset within the company, which must be nurtured, right? So, over a period of time, our our data infrastructure, and everybody has a data warehouse,
Yeah.
everybody has data lake infrastructures, etc. But the effort which is put in to make sure that is maintained in a manner where you can rely on the quality of their data, the way it's organized, the way it's made available to every analytical team in the company, whether it's a risk analytics person or somebody sitting in the business or anywhere else, is very, very important for the company. So the way we've organized the data is something which really stands out. Second, it's got to do with also having this curiosity all the time. And that's important as well, right? Because you may have all the data in the world, but if you're not curious enough to mine that data, it tends to lose value.
Yeah.
So at every point in time, the rigor of monitoring, reviews, discipline of looking at data, making decisions very, very quickly, and constantly having this learning loop going is something which really stood out for me when I joined the company 7 years back. That's where I realized that not only does the company have a very large franchise, now the company is 110 million customers with an ambition to get to 200 million customers. If you look at that scale of data being managed, with that discipline of making sure that who has access, what is it being used for, is it being fully understood? We have these conversations all the time that somebody presents an insight in some review or some meeting, and immediately there'll be several more questions being asked to say, have you thought about that? And have you thought about this? And have you thought about that? And the beauty is that the way the data has been organized, you can pretty much slice and dice it real time, right? Because it doesn't really help for the person to then take back the task and say, I'll circle back.
Right.
Then you lose that momentum.
Yeah.
You lose that conversation, right? So it's very, very important the way the data has been organized. But at the same time, the culture of being curious, the culture of always asking the next level of depth of questions is important. And that's where you begin to get maximum value out of the data, so that you're able to make the best decisions for the customers, and make sure that the right product is positioned for their needs. Take AA, for example. Right? If you think back, let's say 2.5, 3 years back, as an FIU, as we are largely an FIU, we have a little bit of FIP, but as an FIU, we were pretty much early adopters, and pretty much making that very, very clear mandate within the company that this is the next large data set which is available to the company now, apart from bureaus, which must be acknowledged and must be fully integrated into all our business lines. So we have multiple business lines, and to have that integrated at the tech level across the board was a fairly challenging task. But the company really mobilizes very, very quickly because we knew the value of this. And hence, right from our B2B businesses, where a person may be walking into a store trying to buy a mobile phone, the data being utilized for that, to a mortgage application, all the way or to an MSME application, their entire range had to be using a data, and all of that had to be integrated. And that's something that the company did very, very with a lot of rigor to make sure that information fully integrated into the way the company underwrote an application. And as a result of that, I think we would be probably one of the biggest FIUs in the country.
Yeah, absolutely. I mean, I think I've been sort of fortunate to be in the trenches in this framework, and and I've seen the progression of this belief in something new and messy being really useful, and that belief coming straight from the top. And of course, it goes through its stages. You've got to have multiple pitches done, and then And then when you hear that, okay, there's been an executive decision taken that, we've now got to back this. I think for people who are looking at making a new movement take shape, and, we've all put our shoulders to the wheel there, it's a huge shot in the arm, because most institutions would, and it's perfectly legitimate to think so, would prefer to get in when the mess has been sorted out, right? When things are fairly proven, is when most institutions, you would imagine, will put their investments into it. Because obviously, innovation is useful, but only till you have an ROI on it. But when large institutions say, well, we have a vision of making this successful for ourselves, it also makes it successful for the ecosystem. And therefore, I think is really, really a huge shot in the arm for all of us as account aggregators, and generally people in this corner of the India stack, that institutions like Bajaj took the bet early on, and have actually supported the ecosystem while it's gone through and it's still going through evolutions. I think we are in probably the 2.0 of the institution. You are part of the governing council now of Sahamati, which is obviously leading the whole advocacy and governance initiatives for the ecosystem. So there'll be a 3.0, and I think we'll look back and say, well, but for the efforts of leaders early on who took a bet, we wouldn't be here. And so for that, I think we're all very, very grateful. But I did pick up a couple of other insights. I picked up a slogan that you said in terms of 3Ds, which I'm going to use internally, because we also believe a lot in the power of data, and data, discipline, and decisions. That's the 3D thing. And I think if you have the discipline to keep looking at the data, I keep realizing this, that the data starts speaking to you. There's a story that emerges if you have the discipline of looking at it. And I think the whole notion of decisions based on data is obviously a cliche, but it also is very, very useful if you actually execute it.
Absolutely.
And,
Absolutely.
I think Bajaj does a fantastic job. And, I think the notion of having taken an early bet in a messy ecosystem obviously has its challenges, right? And so if you look back at the account aggregator implementation of Bajaj, and your discussions with the team and the challenges that I think Bajaj has seen through, etc. Talk us through a little bit of the implementation aspects of it from your vantage point, as to what you saw was good, what was not so good, what could be better based on what Bajaj has actually experienced. And despite all of this, I must reiterate that, the commitment to do this, therefore becoming actually the largest individual institution that is using this, obviously means that those challenges were not blockers or hurdles which led you to throw in the towel, but those were challenges which, the team actually invested their efforts in overcoming. So what would be some of those that
so
come to your mind?
it was a massive change program, if you think about it. And as you mentioned, Vamsi, I think Rajiv, as a sponsor, as a person who truly believed in this, and made sure that he mandated it across the company, really helped us. Because the company is very, very good at mobilizing to something that there is a strong belief in. And he expressed that belief that this is something that we want to do as a company. So right from the beginning, when we began to integrate AA into the decision infrastructure, several things, and some big, some small, but right at the beginning, how do you get the salesperson who's talking to the customer to initiate an AA journey, right? Because they are not fully bought in as yet, right? They are saying, hey, my life is okay without this, right?
Correct.
Anyway, the organization is able to make decisions based on what I've been doing thus far.
Correct.
So why should I do this? And in a situation where, of course, initially there were a lot of issues that required to be settled in, account discovery would not happen. It would take a bit too long for the process to complete, and so on and so forth, which then leads to the person saying, hey, I'm sitting across the customer, and I need to make sure that experience for the customer is a good experience.
Yeah.
Some even said, why can't you just allow me to take a PDF bank statement? I'll take an ePDF and I'll upload an ePDF. That's easier.
Mm.
And we thought, oh, this is easier, right? So why do you think there's an ePDF which is easier? So a lot of change from the perspective of the front end, accepting it and absorbing it, required a lot of commitment from all the businesses to be able to then stay at it and say, hey, this is important. Let's just continue to improve, leading to automated triggers of AA requests, leading to a lot more of training on the ground, leading to working with our partners, AAs like yourself, the TSPs, Sahamati, and constantly working on understanding the entire funnel. On where are the sticking points, where does the customer drop off in the journey, what is not working, and constantly keep working at it to then get to a situation where, from an initiation to data being received and being used, all of that is stitched together. And it's not just data being received, but drawing insights from that data to create adequate variables or features from that AA data, which can then also get integrated into risk policies or underwriting standards. All of that had to be stitched together. So it wasn't just one team which was working on it. There were tech folks who were making sure these journeys get far more streamlined. There were business folks who truly believed in supporting this. There were folks who were data sciences people or data engineers who are actually drawing insights from that. There were folks who were willing to take that data on, not knowing how much would be the risk differentiation that we would get from this data, because it's all new for us. To put in the first design of experiments to see, hey, what happens? Let's begin to test with this particular data. And then generate success out of that and generate far more value for the customer, being able to offer a better price, a better loan amount, an approval as opposed to, unfortunately, a decline. All of that worked in a manner where every team and every component within that. So I remember earlier when we were thinking about this whole design of what AA would entail, we actually set up teams who had specific tasks. So to give you an example, there would be a set of people who used to be looking at bank statements earlier in a different form,
right?
Who we termed as experts.
Okay.
And we said, okay, so data science people will tag narrations,
right?
And we'll send it across to the experts. And we actually created, systems to be able to do that. So they would, not knowing whose data it is, by looking at the narration, say, no, that's not that.
Right.
It is something else, right? They didn't have any clue of whose data it is, but they would then help the data science team better tag and better draw insights out of the variable. So that's just one example of people being mobilized to really get to a situation where today those journeys are fairly well streamlined. The data flows quite seamlessly. And now not only A as the main journey to get banking data, but a fully integrated version where you could give us AA data, or you could give us an ePDF, or you could give us access through a password to your actual bank account where you can download your statement. All of those channels are fully integrated. So the end decision point is actually doesn't really care as to where the banking data originated. It could originate from anywhere,
right?
And yet it can be seamlessly used to make better decisions.
Yeah, I think the lesson in all of this is that once an institution decides, I think, like you said, the internal sort of evangelizing of it, and somebody holding the fort, so to speak, in dealing with all the negative feedback, because everybody has their own ways of working, and change is never really that welcome. But somebody has to hold the fort and say, no, this has got to be done. And like you said, internally mobilizing different teams for sort of business process re-engineering. And I think we must give, in my opinion, full credit where it is due. I think in the network, the FIPs, have really, and thanks to a lot of efforts from everyone in terms of resolving all kinds of very legitimate concerns that the FIPs have had before they scaled up access to data principles on the back of consented data. All of that has come through as well. So I think while early adopters like you have been dealing with holding the fort internally, I think the network has also sort of responded to say, okay, we've got someone really betting big on this, so let's all of us get together. I mean, that's maybe a slightly sepia tinted view of how how the network has evolved, but the numbers actually are very encouraging, right? I mean, if you look at
Absolutely.
what, maybe 100 million unique individuals that have benefited, on an average at least 1 to 2 accounts that they have linked, which is a very large percentage, and we still keep feeling, like you very correctly said, that we are just scratching the surface. I mean, that's still the largeness of the opportunity ahead of us. So right now, as you correctly said, you've reached a position where the internal narrative is this works, and it is working, and it is definitely enhancing your risk profiling and your risk management job. It's enhancing overall business, right? I mean, would that be
Yeah,
a true
absolutely.
statement to say that
Absolutely.
the
Absolutely.
metrics are showing
Absolutely.
the return on
Absolutely.
that?
And as you were saying, Vamsi, it's not just um, a institution really believing it and putting their shoulders behind it. But if you think about, the huge level of sponsorship, right from DFS to the
Yeah,
lead regulator of RBI and all the other regulators as well, who have really committed to this, to make this a possibility. It's just absolutely amazing. I don't think there are too many examples across the world, probably none,
yeah,
where multiple regulators have come together
absolutely.
and really sponsored and supported creation of an open banking which goes far beyond just banking data,
Yeah,
right? A lot of other geographies internationally have talked about open banking, but to the extent of the vision that has been demonstrated by RBI, by DFS, and the other regulators, including SEBI, IDA, and everybody else,
yeah,
is just
FI, yeah.
absolutely amazing
Absolutely.
to see how these institutions have all come together
Mm.
to really support and nurture this ecosystem which has been formed. That's absolutely amazing to see that.
So, Fakhri, if I were a budding NBFC, um, wanting to learn from how you have uh, institutionalized this adoption of account aggregator, and if I said, what should be the key lag indicators and lead indicators for me to measure whether this thing is going right, from your perspective, what would be the few things? Let's say I'm not yet fully bought into the A concept. I know it works, and I'm eagerly watching this to say, well, it's working for such a large institution, it should work for me. But how should I go about measuring what the key indicators are, other than lag indicators of, we all know top line, bottom line, etc., but that's a little distant, right? This is a very specific thing. What would you advise as the measures for someone to look at?
Very simply put, if you think about the information that you'd use to typically make the decisions that you would make, um, there is levels of benefit that you can realize.
Hmm.
Where A has maximum value is on thin file, no file,
Hmm.
um, deep geographies,
Hmm.
and that's where it is even more impactful
Hmm.
because it is promoting inclusion, right? For
Right.
folks who've never had
Hmm.
an opportunity to be able to participate in the credit ecosystem of the country.
Hmm.
So if you think about it, that has the maximum benefit. So if there is an institution which is looking at working that space,
Hmm.
um, Demogs plus A information
Hmm.
is going to give you an amazing lift in terms of your decision power
Hmm.
and your ability to be able to take on customers and include customers into the ecosystem at levels of risk which are quite acceptable.
Hmm.
So that is an amazing advantage.
Hmm.
Um, we talked about earlier that there is a large bureau footprint,
Yeah.
but it's underpenetrated. it's
Mm.
underserved.
Mm.
So a lot of people have one or two trades or
Mm.
very old trades and so
Mm.
on.
Mm.
Again, that space,
Mm.
I would say, if any institution's looking at working with that space,
Mm.
AA data can add tremendous amount of value.
Mm.
But as you get towards more thicker files,
Mm.
very, very well established files,
Mm.
people who are your own customers, etc.,
Mm.
there is value over there as well.
Mm.
But the scale of value at the other end of the spectrum is amazingly high.
Mm.
Which then, if you think about it, for a country of our size,
Mm.
with what we need done,
Mm.
inclusion is a far bigger priority as opposed to a
Yeah.
segment which is already served quite well.
Mm.
The 100 million that we talked about earlier, that
Correct.
segment has been served fairly well.
Mm.
Of course, there will be a nuance and differentiation that can be added over there as well.
Mm.
But that serves that priority in terms of serving the underserved
Mm.
or unserved
Mm.
quite significantly.
Mm.
So a young NBFC would have tremendous amount of advantage to use AA data to do that.
Mm.
And as you do that, the rest is just basics of managing a risk cycle, right? So you'd underwrite a few things, you'd watch it very closely in terms of how the performance goes, and then you'd fine tune your rules and your models and take it from there. But there's, to our mind, there's tremendous value on that side of the spectrum.
Scale, which and I think as we enter the sort of the last section of this very fascinating conversation, if you look at 2 or 3 things that need to happen for that segment to now be adopters, and I think as Finvu Account Aggregator or anybody else, I think that's really what we are all eyeing. I mean, it's proven its concept now. There's a certain very large base of consumers that's used it, but that base would be the ones that would be the early adopters. They're already being served well enough digitally. And, we know that phenomenon that plays out in digital, that usually it's adopted by the ones that really perhaps need it lesser than the ones that are not yet using it. And that brings about the notion that something must shift for the next wave to happen. So, for example, is it really getting into more assisted journeys and innovating on how form factor of UX must be a mix of digital plus phygital, right? Is it more awareness perhaps, and figuring out how to crack the awareness problem? Because unlike payments, which is a daily use case, and there's a lived experience on a day-to-day basis, is pain, there isn't yet, at least to me, visibility that the act of sharing data is a daily use case, right? And so how do you generate awareness when someone is about to seek a loan, that there is someone? Is it always in the hands of the feet on street, like you said, or is there an industry play? So what would be 2 or 3 things that you think are required to catalyze this to that next wave, for that next sort of set of people?
I think the large part of this would need to be picked up by the lending institutions themselves.
Okay.
Right? Because it's their job to make sure that customers are made aware of the advantages of allowing their data to be used to make a better product offer to them. I think a large part has to be that. At the same time, we shouldn't forget that if you look at the journey today, which could take anywhere between 5 to 7 minutes to conclude the entire journey, right, of providing the data. How can we make it more intuitive? How can we make it much more streamlined? You talked about payments, right? It's so easy now.
Absolutely.
So it's our job as an ecosystem to make sure that these journeys are made far more seamless, far faster. And that would begin to happen because of the fact that as people have linked their accounts at the one point in time, the next step of using that data would be far more simpler.
Absolutely.
The third would be, to my mind, awareness, and we've had examples in the country of this before, whether you have the mutual fund industry with the slogan of mutual fund sahi hai,
Correct,
to now the insurance companies coming up with the protection message, which is very, very important, to other areas like UPI. It's amazing how adoption of that has gone up. So creating a lot more awareness is important. But to my mind, as lending institutions, it's important that we continue to be at the forefront of running that message to customers to be able to best own and leverage their data.
And that sort of brings us finally also to the notion of governance, which is that as we expand and we do innovation in terms of user experience, awareness, and more people come into the ambit, you know as well as anybody else in the organization that digital fraud and the perils of not having adequate guardrails in terms of how that expansion is happening, etc., etc. And you're part of the governing council now of Samati, so obviously there'll be a lot of rule making that collectively as an industry we have to do. Coupled with governance is also the notion of economic incentives. And I think the good news is that the industry has learned from various iterations of rollout of digital public infrastructure. We are all far more aware that we are all in this together. There has to be something in it for everyone, even as we collectively expand it to the next set of users. But on governance, and particularly in the context of AI and RBI's recent free AI report that came out, where to me, I think it builds on the earlier principles of DEPA, which is data empowerment and protection go together. So we need consent, and we need consent managers like ourselves to take care of protection so that those brakes give the accelerators in this overall car that we are all in it the freedom to do so. So any thoughts finally, Fakhari, on how do we bring about governance into the whole equation so that we are all comfortably growing this ecosystem?
I think to my mind that's the most important building block of what we're trying to create. Because that trust has to be at the forefront of everything that we do. If you look at the AA ecosystem and you compare it to any other means of this balance between data protection and inclusion, right? Because there is that balance to be achieved.
Correct.
So it's important for our country to be able to continue to promote inclusion, serving a lot more folks. Making sure that they don't remain underserved, but begin to get to the level how the top 100 million or 100 million people are being served. In that light, today's way of exchanging data for any consumer, right? is a far better way of doing that, right? But at the same time, we could make it even better. If you think about the AA journeys, the way the consent page is structured, is it very explicit? Is it very intuitive? Is it vernacular? It's not just in English, but in the language of choice for the customer. Is it something which the entire ecosystem really adheres to? Not just that I have this consent, but how do I make sure that I do everything which is exactly as per the customer consent?
Correct.
Is something for all of us as part of the ecosystem and the governing council of Samati to make sure that does happen, because that's where the trust will be created. That my data will be used only for the purpose and for the time that I intended it to be used for, is very, very important. But I keep looking at these three elements of at what stage, what's more important for the country. It is also important that we have inclusion.
Absolutely.
I only yesterday I was in a remote little village outside Bangalore, and to the folks over there, it's far more about how can I do better in life. It's less about data protection. There were a bunch of people sitting down together, and they were talking about their family situation so openly that you kind of wonder as to, are you comfortable sharing all of this information, how much you earn, etc., with a group of women sitting together, right, in an MFI center meeting. So we also need to understand, so what's important? Yes, of course, all of it is important, but what's more important at what point in time? So I would say inclusion, is the ecosystem better than what we have had in the past
Mm.
to exchange data from the data owner to where the data owner intends their data to be used,
Mm.
to making sure that all that we are creating as governance and rules and everything else lends to that trust that the customer is placing with all of us,
Yeah.
that we live by that.
No, fascinating. And I think fully agree with what you said, that consumers want to be included, and they want to trust. And I think us as sort of producers of this trust infrastructure have to do our bit. We as Finvu Account Aggregator are obviously always thinking very deep and hard in terms of what can we do better, how can we correct issues that may have crept in. Our heart is in the right place, and I think, to your point, it has to be that way because we are responsible for ensuring that there is trust, so that consumers don't have to worry about it. And I think lending institutions will do their bit in terms of spreading awareness, like Bajaj has been doing, and hopefully we'll get to far bigger numbers and a much bigger usage of this ecosystem in a very short span of time. Fakhri, it's been fascinating to have you on this podcast. We are out of time, but I know we will continue separately in
Sure.
Pune and elsewhere.
Absolutely.
That, folks, is the end of this very fascinating take on how Bajaj Finance, under Fakhari Sarjan's leadership as the Chief Risk Officer, has adopted AI, his views on how we all as a network must take it to the next billion in the country. Wonderful. Thank you for tuning in to Manthan, and we hope to be back soon with yet another episode of this podcast series. Thank you.